Hi, my name is Jason Maida. Welcome back to the Maida Mortgage Minute. It's great to be with you guys today. Today I want to talk about a few different things. Most importantly, some of the changes that are coming down the pipeline as it relates to FHA financing. So as of April 1st, things are going to change. If you're putting less than 10% down on the purchase, or maybe even in a refinance where you have less than 10% equity, the mortgage insurance side of the FHA, that will remain in place indefinitely. It actually remains in place on your loan for the entire term of your loan. So if you're doing a 30-year fixed FHA loan, as of April 1st, that'll actually remain on your loan the entire time. Now, if you put more than 10% down, or you have more than 10% equity, and you do select FHA financing, then that mortgage insurance will remain on your loan for 11 years. So really important to know that as of April 1st, that'll change. So if you do purchase a home and you don't go into contract until April 1st or after, you wouldn't be subjected to those changes in mortgage insurance. So really important. I really encourage our buyers, FHA, especially FHA clients, we'll be reaching out to you to talk to you a little bit about maybe some conventional loan solutions that'll help provide a different option for you, so you won't be subjected to those FHA changes. So now, if you're not currently pre-approved with us, or maybe you're one of our real estate partners and you do have clients that are currently approved with FHA, have them give us a call. We'd love to see if maybe we can pre-approve them for one of our conventional finance loans. Okay, so that's the first thing I want to talk to you about. Second thing is what we're finding a lot in the market is we do have some properties that are pretty well run down, maybe properties that currently aren't eligible for financing, but some of our buyers love them. I do want to let all of our viewers know that we do offer a 203K loan, and what that'll do is that'll allow you to do some rehab to the property. If it's $35,000 or less in rehab or improvements to the property, we can do what we call as a streamlined 203K loan. If it involves a little more detail, doing some major construction around the house, and it's over $35,000, that would be a full 203K loan. So that's a solution that some of our buyers, or maybe some of our agent partners, can use if you have a property that's a little bit run down and needs some assistance. So the third thing I want to share with you today, and just kind of wrap up today by sharing with you a little bit about what's going on in the market. I know I've talked about inventory levels across Sacramento and other areas across the state of California, but it really hasn't changed much. It's a very competitive market. We have a 75% drop of inventory here in Sacramento County, 50% drop in inventory in San Francisco County. The same thing's happening in LA County. We are seeing median home prices move up across those markets, but let's face it, we have a very, very competitive market, so we want to make sure that our buyers, our real estate partners, are armed with great quality pre-approvals. It's going to give you the best advantage to help you basically get that offer accepted and hopefully be in escrow very, very soon. So I would just encourage you to be patient with this market. Understand that there's going to be multiple offer situations. It's not unrealistic to see 20, 30, maybe even 40 offers on one house when there's very few homes to choose from. So we want to make sure that you're in a great position to be able to buy, get that accepted offer, and again, move into escrow as quickly as possible and take possession of the home of your dreams. So hopefully all that information is helpful to you guys today. As always, if you have any questions, feel free to reach out to me or my team. We would love to answer those questions for you and help get you ready to buy. Okay, we'll talk to you soon. Bye.